sir. Where should we send the ambulance?
Send it to the frickin' moon, idiot.
Hello again, everyone. I hope you are having a great day. If you are a holder of Exela Technologies, ticker symbol XELA, before yesterday, then you likely are, as you are possibly feeling quite buoyed by the great bounce back the stock saw during yesterday's trade. In a nutshell, the stock rose sharply at the start of trade in the face of early general market momentum that was presenting significant headwinds to the broader market. Exela just kept pushing up, and when market sentiment began to become more optimistic later in the session, Exela further rode that wave. The stock rose from its previous day close of $2.84 a stock and finished the day 13.38% higher at $3.22 per stock. The impressive upward trajectory still continued in the aftermarket session, with Exela finishing the smaller volume session a further 15 cents up at $3.37 per stock. So that leaves us with the question of what was behind this bounce back. I think it is a combination of two factors, the first being Exela has become a favourite short squeeze candidate among the retail investing scene, especially as it is strongly bet against by a number of hedge funds and larger investors. Also, the forthcoming June results are shaping to be a potential powder keg for this short squeeze effort, garnering further interest around the stock. Anyway, so what I plan to do with this video is to undertake a bit of a technical analysis to see what way the stock is looking like going, at least from the start of Wednesday's session, while also getting an understanding of the size of the short interest that is currently under pressure and feeling the pinch from the recent price rises. I want to bring in some analyst data and include a price target and generally provide some commentary on the statistical status of the potential short squeeze by looking at some of the latest shorts data. But before I do that, I want to quickly mention something that I normally wouldn't say until the end of the video, but I think it is worth promoting from the start, given that many viewers tend to drop off partway through videos. That is, I have announced that I am planning on setting up my channel as a social enterprise going forward, with the idea being if and when the channel does become monetized, I want to move profits towards some causes which I am passionate about. So by watching the videos and following the channel, people are helping to make a difference at no financial cost to themselves. I think it's a great opportunity to use YouTube for good and make a difference to some causes which I personally feel passionate about, and I'm sure many others do as well. So I encourage you to subscribe and be a part of all of that. With that out of the way, let's get into this latest stock update for Exela Technologies. Jumping straight into the technical analysis, we can see that since I did my last stock update, symbolized by this rectangle that stretches into my Wednesday, but what was really the US Tuesday trading session last week, we can see that the Exela price stayed relatively flat up until Monday, which in combination with yesterday's trade or Tuesday, we saw a significant uptick in the stock price. Now, if you are playing the short squeeze, this chart should be making you salivate a little. That is because this rectangle that I drew last week, I did so because there looked like an early attempt at a short squeeze was being made during that session, and basically anyone who had put a short bet in the period covered by the rectangle and hadn't already hedged their losses would be feeling the pressure of the short squeeze. It was only a small window, but it was still something. Now look what happens when I add these two lines to the chart. First, I have the thin red line that represents the lowest price point the stock has seen since our little short squeeze attempt early last week. And we have the thicker blue line, which represents the cutoff price or the top price point of our existing box containing the shorts trades, which is basically capturing the size of the short squeeze. Now the range between these 2 points is not very dramatic at all. It is only about 10 cents. So unless short sales got in the top of Monday or Tuesday's trade, I believe that many people holding short positions still have not been able to cash out yet without taking a loss. This leads me to drawing two new rectangles. The first one is the red rectangle, which is covering the most recent period of trade for the stock, basically all of last week and Monday, Tuesday. Given the stock movements with a few small windows of exception, like we point out at the start of the Monday and the Tuesday, most people who placed short bets in this window will be in negative territory. Additionally, the yellow square I have added contains anyone who did not exit a short position that was put on in that time frame, though I should say likely many of them have exited that position. Anyway, any of those who are still holding that position would now be feeling the negative squeeze on the stock based on the most recent price activity. Basically, the short squeeze has grown for Exela Technologies in the last week, so if retail investors can continue with the same momentum, we could be in for some more accelerated growth in the company's stock price. Zooming in on a 2-minute chart for yesterday's trade, i.e. Tuesday the 3rd of August, there are a few favourable signs for the short squeeze effort presented. The first being the price movement seen inside the Bollinger Bands, the yellow bands bounding the candlesticks, reflects a largely normal pattern of regularly moving across the moving average line between the upper and lower bands, and there has not been any significant narrowing of the bands late in trade, which can be an indicator of a potential breakout. So we're seeing positive signs from the Bollinger Bands leading into Tuesday. The other pleasing sign is that the RSI has largely behaved in a similar pattern to the price movement and hardly entered into oversold territory, giving a greater sense of stability to the current price range in the short term. Also, the RSI has finished smack bang on 50 or a neutral point, which further backs the thesis of the current price mark being a relatively stable one for the time being. So from the technical analysis, we can see that there is definitely a bit of a short squeeze taking place at the moment, at least on a small and short time scale. So that leaves the question, what is the nature of the current shorts position looking like for Exela Technology? Well, to start with, the outstanding shorts float data has not been updated since my last video. However, this still had the stock at a very high 36.12%, making it the 6th most shorted stock on the market at the time. Given the large volume of shorts trading action that has occurred since my last video, and the lack of opportunity short sellers have had to profitably exit their positions, I dare say this 36% of the outstanding float being shorted has crept up since last week. The current borrow fee is still quite low at the moment at 11.13%, so for those in negative outstanding short positions, it hasn't been too expensive to hold on to those positions to wait for more favourable exit points. However, in saying that, if we do see a continued push up in price and further growth in the outstanding short float, this borrow fee will surely move up a lot further. Yesterday's trade was significant in the sense that over half of all volume of trade were short deals, leaving me to think that this short squeeze play is looking quite juicy at the moment. When it comes to thinking about what is driving the short squeeze, well, there is one major news event that all who are watching this stock are waiting for in the short term. That is the release of Exela's June quarter results, which are due out next Monday at the end of the trading day. Now, I have been covering Exela's stock for quite a while now and have previously done a significant dive into the woes the company faces in terms of their current financial position. While the company has a lot of cash on their books due to a recent equity raising, they had a mountain of liabilities. So much so that they had a tangible stock price value of negative $26.70 per share, which is only a slight improvement on the negative $32.07 per share that the stock had in December. This represents the actual net asset value that each stock is worth before factoring in future potential earnings. Just to put this into context, I have been covering two other short squeeze candidates in recent times at a bit of length, those being Marin Software and Workhorse Group. Both of those stocks have positive tangible book values per share and have decent immediate financial prospects when compared to Exela Technology. Basically, because they have almost no liabilities by comparison, they are more able to become profitable faster, which is why I'm happy to hold them in my portfolio at the right prices. I've generally only used Exela as a day trading stock since I have been following it, because I do not like the negative equity position in the stock. However, if there is significant improvement to the company's financial results that come out next week, this could potentially make the short squeeze interest really blow up and perhaps make it a more attractive company to be invested in longer term. Anyway, I think if there is a pleasing turnaround in those results that come out, we will see more upward momentum in the stock price driven by retail investors, but then it leaves the question of how long can that momentum last. Very quickly, here is a look at yesterday's stock action on a Google chart, which shows the continued price rise Exela experienced in the aftermarket action, finishing the low volume session a further 15 cents higher at $3.37 per stock. Another positive sign of continued upward momentum for Exela Technologies in terms of continuing on with the short squeeze. So then the next question that needs to be asked is, how high can Exela's stock price actually go? Given that Exela has a very small market cap, currently at $190 million, it is not covered by many analysts. I only know of one analyst that is covering it. Presently, that analyst has the stock as a buy, despite its poor fundamentals. It also has a price target of $12 per share for the next 12 months, which represents about a 24% upside on the current stock price. Any further upward price action from the current short squeeze effort could easily see this level met and then some. In fact, the stock has crossed the $4 mark on 2 occasions already this calendar year, both in earlier attempted short squeezes in March and June respectively. However, this time could be more significant because it is expected that the company will see compounded improvements to their balance sheet and financials compared to their March quarter results. Two reasons make this thought quite simple. Exela is actively trying to reduce their liabilities. As this occurs, their ability to capture more profit from their sales increases. Also, there has been a return to more normal market action for many industries, including the business process automation services that Exela Technologies caters for. Therefore, there is likely to be an increased return of customers to the company, something that has already been signposted by the company in an update they had last week, where they announced a growth rate of 99% in their small business customer base, and DriveSign delivering a growth rate of 144% in its users in the last quarter. I did dissect this announcement in my last video at a bit of length, so if you're interested in that, I encourage you to go check out that last video I did on Exela Technologies. So my final thoughts for Exela Technologies at this point in time, there is a very real possibility that we are seeing another attempted short squeeze unfold right now, and presently many of the short positions established in last week's trade are under pressure. The $1,000,000 question is, do the retail traders behind the effort have the stamina to continue to drive the stock price up and keep it there? If they are indeed able to for the rest of the week, and Monday's release of the June quarter results reflects significant improvement to Exela's financials, then I believe we could be up for seeing another sharp climb that could see a more sustained short squeeze effort for the stock, which could make Exela the new AMC or GameStop, two short squeeze efforts that have maintained inflated prices for a decent spell of time. I do have some doubts around this, at least in the short term, given the current weak financial position of Exela Technologies. I guess we will have to wait and see what comes this week, and particularly on Monday with those results. Anyway, what do you guys think of Exela Technologies as a company? Will there be a sustained short squeeze, or will it be another snap effort like we have seen in the recent past? Let me know in the comments below. If you found this video interesting or useful, I would encourage you to leave a like. Also, if you want to see more Exela Technologies or other stock related content, I would encourage you to subscribe to the channel if you have not done so already. As I announced at the start of the video, I am planning on setting up my channel as a social enterprise going forward, with the idea being if and when it does become monetized, I want to move profits towards some causes which I feel passionate about, and I'm sure many others do as well. So by watching and following the channel, people are helping make a difference at no financial cost to themselves. Like I said before, I think it's a great opportunity to passively do some good in the world through watching YouTube. So I encourage you all to subscribe and be a part of all that. Anyways, thanks for watching. I'll see you all next time. May the markets trade in your favor. Cheers.